Hello, my name is David Miller. I'm the manager of Nexus Global Solutions portfolio and the co-manager of Dynamic. I'm speaking to you in early September. Well, August was a good month for equity investors, and Dynamic, which is fully invested at the moment, did particularly well with a return of over 4.5%. Solutions with a more diversified structure, about half of the assets invested in equities, followed on with a return of 1.6%. Both respectable numbers over a short period of time, but looking slightly further back, both are now in positive territory over the last 12 months. And bearing in mind the volatility and the difficulties caused by the coronavirus to all of us in the global economy as well, I think that is a respectable return. So what is really going on? Well, central banks, particularly the Federal Reserve, which is the largest, have made it clear that interest rates are not going to go up in the foreseeable future. Inflation remains at a low level, and the economic recovery post-lockdown continues, and in many cases and in many parts of the world is exceeding expectations. This is all encouraging news and a firm foundation against which to make investment decisions. And that's what we've been doing. So what have we been changing and what haven't we been changing? Asset allocation, well, we've left that pretty well alone. Let the trend be our friend, and that's what's been helping us along the way. But at a stock specific level, there's a lot more to be done. We've had the company results for the first half of the year. That's done now. We're looking forward to the next set of numbers in October, and then on to the full year results. Detail matters at a time like this. Technology shares have clearly led the way. It's hard to argue with companies that are delivering 25-30% earnings growth despite all of this. They're not expensive at this level. But market is broadening out. As the recovery continues, we're looking at other areas where there is value, where we can see the potential for recovery. And in some cases, it's a pretty big ask to think that these companies will return to normal in the near future. But if they're cheap enough, then it's worth paying some attention and allocating a little bit of capital to those very depressed shares where there is potential for a significant recovery. Last month, Adobe, Apple and the other technology companies, all of which are in the portfolios, did well. But also it's interesting to see that Marriott Hotels has staged a strong recovery. And further afield, the emerging markets are doing well. This is all encouraging. Breadth is as important as just picking a few winners when it comes to achieving a good return without taking excessive risk. So for the future, and that's the most important thing, the results are what they are, that's the record, but in the future it'll be the numbers as they come through that will really matter. Whether it's companies, as I mentioned, or economies, the detailed analysis of these numbers will drive investment decisions for both Dynamic and Solutions in the coming months. Of course, we have other issues to deal with. The small matter of the US presidential election, and in the UK, Brexit. Both of those are likely to generate short-term volatility, but neither likely to really change the longer-term trends that we're invested in, which is trying to identify areas where we see growth potential in a world where growth is in short supply, and also where we have confidence in the quality of what we're investing in. If we lend money to a company or a government, will they pay the interest? Will they pay our capital back? To my mind, that's what really matters at a time like this. And with companies, are they making things or selling services that in the future we will want? The world has changed a lot this year. I suspect it won't go back to what we used to regard as normal for the foreseeable future, if ever. What I can say is that both Solutions and Dynamic are positioned for this new world, and we have the flexibility to change as events unfold. So I hope this has been a useful update at a time of change, and I look forward to reporting to you again in a month's time. Thank you.